Polls are open. Make your choice out there, ladies and gentlemen. Either way, you're going to make history at the top of the ticket tonight, one way or the other. And we will find out maybe in short order with the states of Florida, North Carolina, Ohio, those so-called bellwether states. Maybe we won't find out early. Maybe it will go into the wee hours. That would be interesting. Haven't had that happen in a while. Still remember well 2000, staying up late and watching, and there was a concession, then there was a no concession, and boy, oh boy, did that start the party going. On the economic side, how does it affect markets? I wasn't aware of this, maybe just peripherally, but our markets used to be closed on Election Day. They certainly were during the Depression and onward till the election of 1984. After 1980, that changed on Wall Street, but there was no Election Day market being opened in terms of the financials, but that's all different right now. What kind of effect does the election have historically, and should we be paying attention to that as investors, whether you're a big-time investor or somebody who's just, Mr. or Mrs. Small Potatoes? Well, let's find out this morning and get the straight scoop from Kyle Walters, who's a certified financial planner, CFP, managing director, Atlas Wealth Advisors. Kyle, good morning.
Morning, Dave.
Appreciate you being here. What kind of take should we get from the marketplace? Maybe not just on Election Day. There's always that look-see that's done right after the election. And historically, it always seems to drop a little bit the day after the election. But, if you're not day trading, should you really care about that?
Yeah, that's a great question. I mean, I think the biggest difference there is are you speculating or are you investing, right? So,
yeah.
From an investment standpoint, if you're looking for the long haul and that's what you're investing for, right, put money in when you got it. There is a little bit of volatility kind of going in and right afterwards, but that almost becomes a self-fulfilling prophecy. So, again, if you're a long-term investor, that's a great chance to be allocating your dollars, continue dollar cost averaging, take advantage of some of this volatility so you can buy, high-quality companies at lower prices.
Well, in the marketplace, too, it's a thing that you can't just – it changes. It's almost like a living, breathing thing, and it doesn't like uncertainty, but elections by their very nature generally are about a degree of uncertainty. So that's the linchpin there, isn't it?
That's right. And, you saw that with, the market, how it ratcheted up yesterday. And a lot of that was the emails that came out talking about, Hillary Clinton not going, effectively everything is in the clear. That's an example of a bit of uncertainty going away. Nobody wants to be thinking that, hey, we could potentially have a president who is then going to be going to jail. So that's a good example of the market seeing a little less uncertainty and reflecting that. But again, it's also an advantage as that uncertainty happens in the short term. Uncertainty we know goes away over the long term, right? So we can take advantage of that and continue buying, continue doing what we normally do.
So markets can adjust to whoever and whatever kind of, and they have historically, but they don't want to have that degree of uncertainty. So, like, if you're an investor, not a speculator, right now, would you just say, look, don't even look at the up and down as it comes from the election, just set it aside. Yeah, pay attention to the election, what it means for policies, what it might mean for your life, but don't look at it real carefully in terms of your actual portfolio today. That doesn't make a lot of sense, does it, to do that and to take too much, take too much to heart on Election Day?
Yeah, no, you're exactly right. This election, I think, has been stressful enough for most people, adding in looking at the day-to-day portfolio implications. One, it's really not going to matter in terms of your long-term goals. So like you said, focus on the election for what it is, which is how's it going to affect, how's it going to affect policy, how's it going to affect, the country, those types of issues, economics, and how that relates to some of these underlying companies in our economy. It does not really have that much of a long-term impact.
So what are you doing yourself here? What are you looking at these days? And as you enter in, will it affect your mindset in your investments, Kyle, going ahead, depending on who is elected president? You can still say, look, that matters to me because of policies, and I'm looking at the long term, so I may have to start adjusting this or this, as opposed to, oh my gosh, hit the panic button. You might have, if you're looking at the long term, you still might be able to put it into that proper context, couldn't you?
Sure. And I think the biggest thing, at least for me and what I do, is going back individually to clients and their specific goals, right? So if we're looking at, something like retirement, which by definition is a 30-year goal, even if you're retiring today, just because we live so long. What if we're going to be needing dollars in the short term, then we really shouldn't be those dollars shouldn't be allocated to money that can go up and down on a day-to-day basis. So, but as far as, whoever gets elected, how it's really going to play into the overall strategy, it really becomes difficult because nobody knows. So really what we just go back to, how much risk can you take?
Okay.
Right? How much risk do you need? And those are two very different numbers.
Yeah, and risk is, and that's, and those numbers can change just depending on the investment across the board. So basically, your advice to small investors would be to just take a nice, calm, cleansing breath. I guess anybody who's followed this election, you could take that advice as well, whether you invest or not.
That's right. I would say continue investing. Don't look at your statements for a few months, and more than likely, we get halfway through the year and it becomes you didn't even notice it happened.
All right, Kyle Walters, he's an investment pro, certified financial planner. He is here with us, joining us this morning. Great to do it here on Election Day with Atlas Wealth Advisors. Says, the markets, there may be some fluctuation here, but they'll adjust, and they'll adjust no matter who is elected president. They've always done that, and they'll probably do the same here one more time. Kyle, thanks for joining us very much.
Thanks, Dave.